The crypto hedge funds have been discredited. The crypto VC have been discredited. The crypto offshore exchanges that are unregulated have been discredited. The crypto air tokens have been discredited. And they're not just discredited, in the crypto industry, right? I mean, the average person's going to look at this and say, well, how is your token different than FTT and FTX? But they're also discredited with lawmakers, congresspeople, senators, policymakers, lawyers, the mainstream media.
Seasoned business executive and prominent investor in the digital assets industry, Michael Saylor, has made a significant impact through his involvement in the crypto space. With over $4 billion invested in Bitcoin, Saylor has taken an active role in advocating for the leading crypto asset by market cap, sharing his insights and expertise through interviews centered on its fundamental principles. Despite his bullishness on Bitcoin, Saylor recently voiced his concerns for the future of the digital assets industry as a whole during a Twitter Spaces chat with popular crypto influencer Bitcoin Archive. Saylor points out that there could be a massive distortion of our perception of the crypto space, and so many things are about to change. He demonstrates the loss of trust in crypto hedge funds, VCs, offshore exchanges, and air tokens, especially in the wake of recent events in the crypto market. He also sees it as an opportunity for a massive educational moment for everyone, including lawmakers, policymakers, layers, media, and the general public. On the political front, the crypto lobby's push to undermine the SEC may have been discredited, and this may lead to a change in the narrative around regulation. The crypto market will likely continue to evolve, and the future will be shaped by a greater focus on education and regulatory compliance. This is a crucial moment for the crypto industry, and it will determine the direction it takes in the coming years. In this video, Saylor is going to be discussing the two potential paths forward for the industry. The first is a regressive path where only a limited number of assets are approved for trading on digital exchanges. The second is a progressive path where a registration process is established for digital assets. The outcome of this debate will have a significant impact on the future of the digital asset industry. A regressive path would severely limit the number of assets that can be traded, while a progressive path would provide greater flexibility and opportunity. We will now get into the video. Make sure to watch the video until the end and hit the subscribe and notifications buttons to stay up to date. Your support means everything to us, so be sure to show your love by giving the video a like and sharing your thoughts in the comments section. Your engagement will help us reach more people and continue to bring you the latest and greatest content. Thank you, and enjoy the video.
If I'm arguing for the crypto industry, I would say the regulators need to give us a way to register our assets, and then they need to give us a path forward. There are two paths forward, Archie. There's a regressive path forward, and there's a progressive path forward. The regressive path forward, the most conservative, is you can only trade digital commodities, and I'll designate Bitcoin, and I might designate three others. And maybe I'll designate a stable coin issued by a publicly traded company in the US or an FDIC insured bank. Okay. That gets you to about 6 to 12 assets that can be traded on any kind of digital exchange in the world, right? That's the regressive move. That collapses 99.9% of everything. Okay. And that's the worst case if the regulators move hard regressively. The best case, the progressive move, is we're going to give you the ability to submit your stable coin as a digital currency, and you can issue a digital euro, a digital yen, a digital dollar. Tether can register. Everybody else can register. When you go through a registration, we're going to tell you what you got to do to remediate. We might fine you for something you might have done. We might tell you you have to divest yourself of some other business line, or if it's too centrally managed, we might tell you to divest something. This is just like antitrust when you try to merge two companies together and they say you can buy that company, but you can't have their banking branch in the UK because you would have a monopoly on banking in the UK or a monopoly on something. A path to register would change the world. And let's say you could register a digital commodity. Well, let the 100 most ethical, decentralized digital assets try to register as commodities. 90% of them will probably get knocked down. there might be a route.
The veteran business executive continued by saying that the future of the digital assets industry is heading towards a more regulated and registered environment. This means that digital assets will have to be registered as digital currencies and comply with a set of disclosure rules. These rules include publishing the assets, having a treasury with no more than a 1-year duration, publishing a board of directors and balance sheet, getting audited by a Big Four accounting firm, and having civil and criminal liability for lying. Here is what he has to say about decentralization and tokenization, adding that not so many will be able to get to this level with regulations.
Maybe someone can get there, but right, there aren't that many that'll get there right now. So there's going to be a handful of digital commodities in a properly regulated, registered world. And then the rest is like they're digital securities. So you want to sell a exchange token, or you want to sell a Solana or Cardano or Ripple or whatever these tokens are. Well, you register them as securities, and then the SEC says, well, okay, well, file these other 100 pages of disclosures and get an auditor and start publishing your audited results, right? And then trade with and sign up to Sarbanes-Oxley type restrictions. And then you'll have the same securities restrictions as anybody else. And then the last idea is like a digital token, maybe an NFT or something. If Katy Perry wants to sell a Katy Perry token, or Tom Brady wants to sell a Tom Brady token, there's nothing unethical about trying to sell your token as long as it was a registered token and you made the proper disclosures. Like, there's only ever going to be 1 million of them, and then you have to sign up to criminal civil liability if you lie, right? And then you get audited, and you have to publish a quarterly result saying, yeah, there's still 1 million, and this is what it does. And you've kind of taken yourself public and securitized yourself. We are sitting in this particular interesting part of the economy, right? The regulatory environment is got a big question mark over it. We are twisting in the wind.
According to Saylor, of the different types of assets, Bitcoin is the only asset that has been established as a commodity and is the only asset that can be traded without restriction. Regulators have yet to provide a clear framework for how digital tokens, securities, currencies, and commodities should be registered and traded. This has created a situation where it is difficult for digital exchanges to operate in a compliant manner. What do you think of Michael Saylor's view on the future of cryptocurrency? Should anyone or any company be allowed to create digital commodities? Let us know what you think in the comment section below. Also, ensure to hit the like button, subscribe, and turn on notifications. Thanks for watching.